Welcome to the Daily Update Podcast, where I'll go over the action in the market for Thursday, August 14th, and we'll see how things look for Friday, August 15th. Going over what happened on Thursday, the S&P 500 set a new all-time high, edging up a mere 0.03%. But it lacked strong follow-through from what we saw on Wednesday. It closed right near the critical 64.68 weekly resistance level that we've been watching. The Nasdaq and Nasdaq 100, however, underperformed, with the Nasdaq 100 slipping 0.07%. Mid and small caps also weakened, feeling the pressure from rising interest rates and inflation concerns as these sectors rely heavily on borrowing. Growth stocks outperformed value at the mega cap level, with standouts including Amazon gaining 2.86%. However, mid and small cap growth lagged, and Tesla was down 1.08%. Sector performance showed some resilience in financials and healthcare, while semiconductors did hit new highs, signaling strength in tech. The S&P faced a choppy trading day after a stronger-than-expected Producer Price Index, or PPI, which came in at up 0.9% against an expectation of a rise of 0.2%. This reignited inflation fears, reducing expectations for a 50 basis point rate cut in September, with the markets now leaning towards a 25 basis point cut. Despite a gap lower open, prices climbed above the daily pivot at 64.64 and ended up closing slightly positive. Volume remained below average, and technical indicators still are positive. Short-term indicators, including the Williams %R, CCI charts, and stochastics, show good momentum. However, the Stochh RSI has not reached that level yet. In the intermediate term, the CMB Composite is a new addition to the extreme list to go along with the Sean Trend Meter and the Boom 50, measuring how far away price is from the 50-period moving average. Geopolitical factors add uncertainty in the background. With the upcoming talks between Putin and Trump, any trade deal developments, tariffs, and Middle East tensions remaining in focus. The VIX rose slightly to the high 14s, reflecting a modest uptick in market caution. Looking ahead to Friday, August 15th, the 64.68 weekly resistance level on the S&P 500 chart remains a key level to watch. A close above this level could signal a bullish continuation, while failure to break through and close above it on the weekly chart suggests resistance is holding firm. Friday's economic calendar is pretty packed, with retail sales being the most significant release, along with Empire State Manufacturing, industrial production, capacity utilization, and consumer sentiment. These data points could sway market sentiment, particularly amid ongoing inflation concerns. The short and intermediate term trends are strengthening as measured by the ADX, but negative divergences, although improving, still persist. Seasonally, August, as stated before, is typically weak, especially during a post-election year. The financials and healthcare may be attracting buyers due to recent weakness, while small and mid-caps remain vulnerable to inflation and rate pressures. In conclusion, the S&P 500's push to a new high is encouraging, but the 64.68 resistance level, inflation concerns that are now emerging from the PPI, and Friday's economic data will be critical drivers. Geopolitical developments and sector performance will also shape market sentiment. While trends are strengthening, moderate conviction and lingering negative divergences call for vigilance. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.